Hi, everybody. This is Craig. I'm a senior finance officer with Credit Suite. Thanks for joining me today. I'll be running today's webinar for the next hour or so. Can I get a check mark or any kind of a chat signal or a question mark or anything? If everybody can hear me okay, give me a wave or something. That'd be great. You click on the little wave button next to your name, or you could shoot me a little question on the questionnaire or something, or let me know by chat if everybody can hear me. All right, Suzanne, can you hear me?
I sure can.
Okay, all right, then I guess thanks, Eric. I guess we'll get going. Guys, what we're doing something a little bit different today. We wanted to give you guys access directly to the finance department, and we're going to be doing this once a month or maybe even bi-monthly, depending on the demand for it and how quickly things change. We wanted to cover some things today, make sure that you guys are getting the support that you need and the proper contact numbers and knowing who to call for what issue, if there's any issue that you have. I'm also going to go over a couple of topics. I'm going to go over credit versus serviceability, personal guarantee versus business only. We're going to talk a little bit real quickly about our SBA because it's been very successful lately. And I'm also going to let you know about a new term loan product that we just rolled out a couple of weeks ago. And it's really doing well. And I wanted to get that out to you guys so you can market that and get it to your clients for those that may qualify for it. Suzanne, if you'd like to introduce yourself, Suzanne is a partner advocate, works very closely inside the finance department, and she helps with everything from lender relations to onboarding new partners and making sure that you guys can get to the right place at the right time. Suzanne.
Yes, my name's Suzanne Young. I worked with Credit Suite for 6 years, and I am excited to help at any point. I'm not sure, Craig, if you wanted me to give the phone numbers now or wait until later.
Yeah, we go ahead and give them now, and then we'll retouch it again at the end, if that's all right.
Okay. So my phone number is 727-777-4503. You call me if you have any questions about our funding products, if you have any question about putting your clients in or any of the training that's on the portal. And then if you have questions about technical problems with putting in clients or with your clients that you're doing with for the business credit builder, you would contact our Credit Suite partner support team. Their phone number is 727-324-6590. And the other thing is when you're in your portal, there's a little green button down in the back, the right hand corner. It has help and a question mark. If you click that, that will take you right to our chat for our partner support team and our partner success team. And they're fantastic to help out with any of those details. They can also point you to the right person. Now, if you have questions about any of your commissions that if you haven't seen them yet or any questions about that, you'll contact our financial operations manager. His name's Kevin, and that phone number is 727-300-2172. And I'll tell you that again at the end. But also, if you're in the portal, you can click on contact us. It will tell you all the numbers that you need. If you have any questions for billing, partner success, my direct number is not on there on finance, but I'll make sure that gets put on there eventually. So
All right, thanks, Suzanne. Appreciate it. All right, guys. I was going to go over this. We have a new product out, and I wanted to touch base with it. It's like I mentioned before, we had rolled it out a couple of weeks ago. It is our term loan product, and this is the idea of this type of meeting that we're going to have at least once a month. I want to, if there's any new new products that are out there, any new guidelines, any new qualifications, or even a new bucket that may open, because the market is always changing and always growing. The economy is still doing very, very good. SBA is wide open right now, taking all applications. So there's a lot of lenders out there that want to get money into the economy and get it out there and lend it. So one of the newer products that we have is it kind of fits the bucket between merchant cash advance and revenues to traditional tier one term loans. Sometimes it can be a hybrid, sometimes it could be just right in the middle, that niche. There's a lot of clients out there that have a either not established at all or barely established business credit because of either their lack of knowledge or knowing how to do business credit. So we take that into consideration. So a lot of times we have to look at their FICO scores, of course. So FICO scores, we get a lot of 650 to 680s, which are right on the bubble. So that's why I'm excited about this particular program, because we have a term loan product that goes 2 to 5 year term. Interest rates are 6% to 11% APR with monthly payments, and it's all based on risk. I can literally get it by 6 months bank statements and a 2-page application. We go off business credit, owners, FICO score, and cash flows that are going through the business bank account. The quals are 2 years time in business, a 660 or higher FICO score of owner or owners, 15K a month in minimum revenue, clean bank statements. And what I mean by clean bank statements is well, I guess I got to be careful how I say it because I don't want to use any underwriting terms, but it's basically clean banks mean higher ADPs, which is average daily balances, minimal NSFs, non-sufficient funds, our canceled checks, and we look for negative day balances. Now we know all businesses may go through a little trouble spot every now and then, but as long as it's not systemic throughout the 6 months bank statements we see, then we're okay with that. But if it's always going 6 or 7 or 8 days late, or negative per month, then obviously that wouldn't be a good fit for this particular program. Let me see what else says it. We prefer no current debt. If there is debt, the term loan, hopefully we'd want to pay that current debt off, and that's kind of key. This term loan works very well for 2 years time of business. Now they're getting into 50, 60, or excuse me, 50, 75, or $100,000 term loans. We want to make sure that we're not competing with any other debt on there, especially other MCAs or revenue loans. So for clients that have multiple loans, the same mathematical rule applies. If the overall debt is more than the monthly gross revenue, then we would have to wait until those loans were paid down 50% before we could proceed with the new loan to pay those off. If I've lost anybody, I apologize. I can go over it again in a little bit, and we're going to have a Q&A at the end as well. Okay. So that's it's our term loan program, 2 to 5 years. It fits that gap. We know that revenue loans and MCA loans are high interest, daily paybacks. We don't recommend those loans unless there's a specific reason for it and the business owner absolutely needs it and they can meet their margins. Because what we don't want is we don't want to put a company out of business. We want to keep them coming to us, and that's why we educate them. Especially when they get those loans, we want to tell them. I'm always telling clients, hey, take some of this money and fix your personal credit. So 30 days from now, I can get you into a tier one loan, and we can pay off this higher interest loan that you're going to love it when you first get it, but after 3 or 4 weeks of daily payments, you're going to get tired of that particular loan. And that's just the way that is. And we understand that, but we also have to educate the clients to know where they're at and what they look like and their true business conditions. So their expectations are in line with what reality is. And that seems to be most of the conversations that we have with clients. So we're really excited about that. We've submitted, we beta tested it for about a week, and now we're up to about 10 to 15 files a week that are being inputted into this system, for this particular program. The another good thing about this program is if they don't qualify, they're qualifying for the same time for either a line of credit, a traditional line of credit, a term loan, or a revenue hybrid. So we don't have to go and there's no inquiries. It's only a soft pull. We can look at 3 different products at one time. So it's really cool product, and hopefully you guys will take advantage of it if you have some clients out there that fit that mold. Okay, don't forget about the time of business is 2 years. SBAs are picking up. And what I mean by that is they're more accessible. The rules and regulations are getting a little bit more lenient. Industries that weren't open before are starting to open. Less collateralized requirements on $500,000 and less. We're starting to see a lot of those numbers because we're starting to close a lot of SBAs. We do a lot of SBAs for our well-qualified clients. SBAs are, full doc, 2 to 3 year financials, depending on where they're at, whether they have 2 or 3 years time in business. Financials must show a profit. If you're showing a negative on the profit and loss, that's right then and there. That's a deal killer on that. They do try to collateralize anything that's over 350, around 500,000 range, depending on how strong the financials are. Obviously, if there's plenty of cash flows there, we're talking about a larger company, then that would be a lot easier on the SBA side. And that rolls me right into credit versus serviceability. And the reason why I bring this up is, and I know, most of you know what I'm talking about, but I also want you to understand that this is what we talk to about clients. Because we get a lot of inquiries in where the client says, yeah, my annual gross revenue is 120,000, and I'm looking for a $200,000 loan. If that didn't stick out in that person's head while they were saying it, we kind of worry about that person. It's kind of hard to borrow more than your company makes in a year gross, because the payments just aren't going to be there. So the difference between the SBA and the traditional term loan is term loans, we're going to stay right around 25 to 30% of the annual gross revenue, because the max term we go is 5 years. Now with 5 years, that gives you 60 payments. If it's a $50,000 or $100,000 loan, that's going to be a pretty good size monthly payment. And we need to make sure that payment stays within a certain ratio of their debt to revenue ratio. Okay, so that's why we're able to get on an SBA almost 5 to 6 times that. We can get up to 100 to 120% of annual gross on an SBA, because we can go out 10, 15, 20 years depending on the size of the loan, which makes the monthly payment a lot smaller, which keeps the ratios down, which is we can approve a lot more. So that's the difference between the two. One's a lot quicker. The other one, every SBA is anywhere from 4 to 6 weeks, depending on if we're collateralizing or what the actual deal is itself. Okay. Back to credit and serviceability. Credit, being credit qualified is that, hey, you've got the good FICO, you've got time in business, you've got all the administrative check marks, all good to go for somebody that would want to lend you money. But when we get into the size of the loan, the other side of the equation is where some people forget about, which is serviceability. Okay, because the underwriters are always worried about, most and foremost, how is this client going to pay the loan back, and can that person facilitate that payment, without crippling the cash flows of the business based on the information that was provided in underwriting. So you can have an 800 credit score and 100 paid X and make $1 million a year, but if you can't afford, what the particular, 50,000 or $50 million loan you're asking for, and you couldn't service that debt, then that would change things, obviously. So not only do we have to get them, credit worthy and get them qualified, but we also have to make sure that they can service the debt. So when you guys see a lot of things for us, we call them quals or qualifications, it doesn't mean they're automatically going to be approved if they meet 80% of those qualifications, or even 100%. That just means that now they're qualified for us to underwrite it, and it meets the qualifications for us to get it in for an underwriter to actually review it and then make a decision, because that's when things generally are uncovered. I will talk to a client and, oh yeah, I've got a $100,000 tax lien and I have a payment plan. Okay, great. Now that's important, because the amount of that tax lien has a lot to do with how much we can loan. Then when we do our due diligence, we found out it's $220,000 tax lien. That's still the balance. That changes everything. So things like that come up, and I know it might be shocking to sometimes, or disheartening. We're like, oh man, I spent all this time with this client, now we're dead in the water. But stuff like that happens. So we just got to get better at trying to pre-qual if we can. But we also don't want to set up a lot of barriers for the client to where they don't even want to try, because you'd be surprised some things that we can overcome. Because we got to remember, we're a fiduciary, we're an advocate, we're working for the client, not the bank. So we review things, try to catch things the best we can, stomp our foot and wink our eyes and get the right paperwork that we need to get turned in to give the opportunity the client the best opportunity to fund. And that's what we focus on. So credit versus the serviceability is a key thing. That's why even on our UBF program, we max out around 150,000. Everybody says, well, why do you stop at 150,000? I said, because after 150,000, banks are going to start looking for financials. There's only so much credit that they're going to lend or allow a business to have in their institution without qualifying them, financially if the numbers get too big. So it's sort of the same concept. All right. All right, and the other topic I wanted to talk about, because I know this is brought up quite a bit, is personal guaranteeing. We always refer to it as PG, personal guarantee. Personal guarantee does not mean business only all the time. Okay, and what I mean by that is that personally guaranteeing is that hey, if your company folds and you close up everything and move to the Bahamas, you're still going to be responsible for this particular debt. And then that another word of saying that is having faith in yourself or willing to back your own company. Where we're trying to get clients to go to and business owners is there's a huge difference between personally guaranteeing it and it being on your personal credit or not. The business loans we do go on business credit. They report to business credit bureaus. So they're not going to show up as trade lines on I'm talking about anything from equipment to all the funding that we do, term loans. Those will not show up on personal credit. They're not going to mess around with installment loans, ratios, utilization on revolving, messing around with the FICO scores, nothing like that. We want to separate that client financially the best we can from the business, to where the business is not only earning the credit, but it's being reported to the business. Personal guarantee, most banks and most lending institutions will want that to make themselves feel better, for in the infancy stages or in the beginning of companies from their time in business. Everybody has a different definition of startup company. Most people say it's 6 months, it's 1 year, but the official startup realm is 0 to 36 months. After 36 months, everything opens up wide open. Most businesses fail within the first 36 months. So they're all considered high risk up to that. Some lending platforms don't worry about doing startup rates as long as you're over 2 years, but it doesn't mean that they're not factoring in the risk of you being under 3 years. 3 years gives us at least 2 full years of financials and gives us a good picture of how successful or not successful a business is and paying their own debts and dealing with debt. And are they growing? Are they on an upspurt? Are they on their way down, or are they stagnant? Where are they at in their growth, and what's the plans for the funds? All of that comes into play and is very, very important. That's why you see the way our FOs here in our finance department, we kind of divide people into startup and non-startups. It opens up different platforms and different things that we can do for the clients. And there's certain programs that fit certain ones better. So that's why we need to know time in business, annual gross revenue, business credit range, business owner credit range, really, and industry allows us to really focus in on what programs that we should be prepared to talk about when we're initially talking with the client. That's why we ask those types of questions, because we automatically get into, okay, well, there's options here that the client or even you guys, the partner, may not even have thought about, that after we have a good conversation and find out what the real deal is and what they're using the money for and what else is available out there, we want to give them the best opportunity to fund. So that's basically the difference between the two. So personally guaranteeing some, I know we get some clients that are I'm just not going to personally guarantee it. And when I ask that question, why, nobody really gives me a big question other than I just don't want to. I don't feel I need to, but you're asking the business that you're asking money for to do it. You know what I mean? They're guaranteeing the money. Why wouldn't you? But I know everybody's a little bit different. Now, if we're talking about a large company with a great business credit profile with a lot of comparable debt on there, we have plenty of platforms that don't require a personal guarantee, but they got to work on that business credit pretty hard to get it up there. And we need to get some comparables on there. The way I explain it to clients is that business credit is kind of like a teenager. You're gonna have to co-sign for it a couple of times until it earns its own credit and get on its way. It's kind of the same approach. But when we're dealing with smaller companies, home-based companies that are stagnant around 200,000 or less a year, those are going to be very, very difficult, because most lenders and banks know that that owner lives inside that business. So looking at the business owner's FICO score is going to give us a true picture of how that particular person would run a company like that. But then if you get large, then much larger companies, then we can definitely look at non-PG. So we can definitely talk about that as well. The other programs that we have, I'd like to divide those up as we have future meetings. And I also want some input from you guys, the partners. So I'm working with Ty right now and Rick. We're going to get some type of either a portal or an email set up to where we can take in questions and or ideas from you guys, our executive partner group, which we love very much. We want to make sure that we take care of you guys, and your input is very, very important to us. It'll help us service you and your clients better, but also we want to talk about topics that mean the most to you or that you mostly have questions about. So we're going to open up in the next week or so. We're going to have a program, and you'll be getting it in one of the million emails that you get from Credit Suite a week. And one of those, there'll be some type of either a portal or a soapbox or something to where you can input some ideas that you have, like when you're working throughout the week and you go, oh, I wonder what this is, and I don't want to call Craig 5 times because he's not going to answer right away because he's busy. So, so I just wanted to give you guys the opportunity to, as you get those ideas, you'll have a platform to go to type it in there real quick. So when we do have these meetings, I can look at those topics and we'll go over those because I want to be able to talk about the topics that that's important to you guys, other than just our new platforms that we have. Our platforms change all the time. We're always looking to better add lending sources that we have verified to join our team to improve the quality of customer service that we give you guys. So that's something that we consistently do on a consistent basis. And I know Suzanne is leading the charge on that as well. So that's why I wanted her here today. But Suzanne, is there anything that you wanted to say before I open up the floor? Because I'm sure there's going to be some questions. Is there anything that you wanted to add to or reiterate anything?
Just looking, I heard them yesterday in the meeting talking about the Facebook group for partners that they're working on. So if you're not part of our Credit Suite Facebook, go ahead and get onto there, and then hopefully we'll have that information soon that we'll have a group just for partners. And that's a good place to get some of that input for Craig, what you want to learn about, for me, what questions that you have. If you can't find information in your portal, if you're looking for specific trainings, those kind of places where you can ask. And also you can email me. I'm Suzanne, SUZANNE @creditsuite.com, and email me any of those questions, comments, concerns, and I'll get those to the right person.
Awesome. Thanks, Suzanne. All right. Hey, guys. I know some of you came on a little bit late, but if you have any questions, now's the time. If you want to go ahead and start typing in some questions about the programs or any ideas, or if there's any other topic that you'd like an answer on as far as funding, please go ahead and send those in. Nobody's got any questions at all? None? Was my presentation that awesome?
Oh, there's one.
Well, where? Where am I seeing it at? Hold on a second.
Question. Ralph Sheehan asked a question. He said, in regards to the unsecured program, does having, you see it? Does having business credit in place first make any difference in approval amounts?
All right, as the unsecured, the UBF program. Yes, it can make a difference. If a client has already been out and shopped around for their own business cards, depending on the banks that they went to, but even if they, that would make a difference as well. Also, because that might be some of the same banks that we would have lined up for them to get larger amounts, because we always tell people we can get 4 to 5 times the amount that they could get on their own by the processes that we use. So if they've either already gone to one of the banks that we use, or at a minimum, there's still going to be an inquiry on the EIN and on the social that show that, hey, this person applied at this particular place for business financing. And then they do their due diligence, say, okay, well, they've already been out there searching. We would much prefer, not saying that that's going to disqualify them, but it will affect the amounts that we can get. It may affect it a little, it may affect it a lot, depending on how many times they went out on their own. That's why we always want to tell everybody to please, don't go out on your own yet. Let's try to let's do that before you go out and start applying on your own, because there's going to be a record of that. Because half the trick of what we do is going to the banks at the exact same time. So before bank A knows what bank B, C, and D are doing, we've maxed out the full credit potential that company can apply for. That's the trick of the trade, is doing it that way. Plus, the banks we go to, we know exactly what they're looking at. So there are little things that might be on the articles of incorporation, or a mismatched a fat thumb social, or a not matching address between the application and what's on the Secretary of State. There's little things like that that either can generate a decline or at least a lower credit amount. Anytime a human being gets involved, and we like to keep it automated, but anytime there's a human being that gets involved and has a question about a file, then that tends to drop the credit limits. For some reason, we've noticed that. So yes, to answer that question, yes, it does affect it, but it does not disqualify it. Fix and flip financing. Yes. We have a bunch of different programs for fix and flip. What I mean by that, we got full doc to low doc to no doc, hard money. It all depends on where they're at credit wise, what their experience level is. A novice first time flipper is probably going to get 70 to 75% LTV and a 3-year amortized, no prepayment penalty. And then they would either have to flip out by then or not. Sometimes we'll have, depending if they qualify, we can do after repair value. We could do up to 90%, and then do payments on the stress value of flipping the house, improving the house on the home improvements, and we could finance up to 75 to 80% on the value of the home, or the property, the investment property. Investment property, no matter what you do, they're always going to want you to have skin on the file. So that's the way our lenders are. So we also try to find different ways to finance that gap for those that don't have it. Another key thing about house flipping is with repair value, without repair value, we want to do properties that are above 100,000 and up. 100,000 and up. Anything less than 100,000, my lenders and almost all lenders consider that a cash deal. But yes, we have a whole bunch of especially in the back, you'll see in your back office, there's 4 or 5 different programs depending on what direction your client would like to go. Interest only for a year, if we're looking for a 30-year ARM, or 10-year with balloon payment. There's a whole bunch of things we can settle it up. But yeah, it's strictly asset and credit driven. So if we go full doc, then we can look at financials and we can get into the really low interest rates if they're going to buy and keep. But if they're flipping, we can get in and out of there with very, very minimal documentation, between 6 and 9%. And interest only payments, they get in and get out real quick and flip the house. So we have a bunch of those. So hold on, we got another question here. I'm new and I need help providing the correct product to my client. Well, I can tell you that that's what we use the FBQ for. We wanted, and the way we structured the way we do things is we want you to have faith in us to be able to communicate correctly with your client, and then figure out what they need and move forward on your behalf. And then we update you along the way. We don't expect you to know what we know, or you'd be doing what we're doing. So we would rather you go out and find them, bring them back into the boat, and then go back fishing, and then we'll stay on the boat and fillet the fish for you. Sorry, I'm very metaphoric.
Let me just say, you said FBQ, which is a finance blueprint qualifier. So Tamara, when you put a client in as a direct funding client, then you will fill out for them, or they can fill out for them the finance blueprint. It's the first thing that it will tell you to do when you're putting that in. And it asks just a few questions, and then you can do the full finance blueprint that asks about 10 questions to figure out fundability. Once we get that, our processing team will take that client and they will assign it to one of our finance officers, who will then call that client and talk to them about all of the things. Craig is our senior finance officer. He's one of the ones that will get those clients and discuss what product. So you don't have to worry about that. I mean, it's good to know the products, but to really get into the nitty gritty, that's the best way to do it.
Right, exactly. I apologize for not spelling that out. I get hung up on acronyms. But the blueprint qualifiers is when you go in and enter a direct funding client, it takes you to that screen to answer those questions. And those questions, all of those questions are very, very important. We try to ask just the minimum that we need. So that gives us an idea of where they're going to go. If they state that they have a 550 credit score, we know we just eliminated 80% of our products. So, you know what I mean? So, or, if they've got good credit and no revenues, we still got products for them, but that just eliminated the other 80 on a different 80%. You know what I mean? So it all depends. Industry, time and business, all those things can guide us. And then most importantly, what is the client looking for? The client, we may read an FBQ and go, oh, I can get this person, 300 grand right now on a term loan, but they may not want that. Maybe they want a $50,000 piece of equipment. You know what I mean? So finding out what they need is the most important thing on your behalf. So we know, what is the purpose of funds? After that, we can get them qualified and get them into the proper or the best product, and then update you obviously along the way. As far as in your back office, it's under finance tools, partner tools, and finance resources. When you click under finance resources in your back office to answer this other question, it's right in there, and it's broken down into topics. It'll have.
Can I clarify, because I looked through this the other day, and as I was trying to explain, if you look on the left-hand side, it says partner resources just below the home, and then you'll click on that resource library, and then you'll see the category list down the left-hand side. And once you click on the finance resources under the category list, you'll see finance cheat sheet, you'll see funding guidelines, and that is where you'll find the basics.
Perfect. Let me see here. I've got, let me see another question. If I purchase my mother's home to have a rental property, can that be used as collateral financing to fixing up the home? The business has no other further financials. Yes, but we have to be very, very clear that it's not going to be owner occupied. A lot of times lenders don't like to do that because a lot of, you're going to inherit your own home. You know what I mean? If you're renting it to your mom. But yes, there are ways around that. I would just have to coach you up on it a little bit, but yes, you can, of course. So if it's if the property is already owned, or you're looking to buy it, or whatever the equity is in it, we can do a cash refi out on that for the cost of whatever you need to fix the rehab on that, whatever you need to fix on the home. But just be very careful, because they're very, 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 very serious about not owner occupied. Let me see here. Does UBF program require a startup to be producing income? Great question. No, that's the beauty of it. You can have an article of incorporation file. In fact, I've gotten people approved for the UBF program before they even got their articles of incorporation yet. But obviously we can't finalize it until we get the articles of incorporation, the EIN number, and a copy of the driver's license. It requires no banks, no financials, no nothing. It's strictly ran off of credit. So the only bearing that it has on the for the business side is the 2-year mark. If the business articles of incorporation were filed less than 2 years ago, or I should put it this way, if the articles of incorporation were filed more than 24 months ago, more than 2 years ago, then we get 10 to 15% higher projections on credit card limits for that business. But it doesn't matter if it was dormant, if it made any money or anything, because no financials will be needed, not even stated. So that's the beauty of the UBF program. Let me see here. Seen another one. The main difference in the PG does not show in personal. If you default, the EIN is used to obtain the loan, meaning all that your social was included is the process. It does not show on personal credit. That's correct. That's exactly right. Now, if you default, you're going to have to, pay that debt back. But that's you're dead on right there. All right, let me see here. The name of the Facebook group for the partners, Suzanne, is there? The executive partners have their own Facebook yet, or is that what we're talking about working on?
Yeah, I think it's in the process. So we'll keep you updated once we have.
Yeah, I know that's in the works. We're always talking about trying to, give you guys more. We want to give you more to work with and more access to us that way. So I'll get you back that answer. That might be one of the platforms that I know we were doing multiple platforms. Tide never does anything one way, so we want to make sure it's easy and accessible to everybody, so we can get you guys together and keep going from there. All right, let me see. Did I miss any questions? Do you see any other questions on there, Suzanne, that I may have missed?
Did you answer Teresa's question about purchasing my mother's home?
Mm-hmm. Yep.
Okay. I
Yep.
was slacking about that Facebook group while you were
Works a
talking.
lot better too if you have two different last names. Just check. Yeah, call me about that one. 727-386-8971. We'll talk more detail about that. Let me see. We talked about the back office. Anybody have any other questions at all on there? All right, guys.
Wait,
Well,
another one just popped up
okay. Uh,
from Wesley. Do you see it?
what is the program business for UBM?
And then he changed it to UBF. And where
UBF
is it in the back office? So that's called unsecured business
financing.
financing.
Mm-hmm.
And I think that's the first thing in that finance cheat sheet or in the funding guidelines.
Exactly. I'll go over the UBF program in detail here real quick, guys. I'll give you guys the promo on that since we got about 10 minutes. But yes, the phone number, 727-386-8971. If I don't answer right away, that just means I'm on the line with another client, and I'll call you right back.
Craig, do you want to, I know in the last webinar you talked about why we don't just send out that funding program cheat sheet so you can download it. You want to explain why that we keep it in the back office that way?
Well, yeah, the reason why we don't send out the cheat sheets because we're always updating it, guys. It's a living document. We would have to shoot out, another 250 emails once a month after everything changes. So that's why we just want to update it in one place, and that way you can access it whenever you need it. Because even the PDF files back there that have each product, they're just going to have the basics on there, guys. It doesn't mean, every single thing is going to be on there. That's why they're just cheat sheets. But you get a really, really good idea of what qualifies for what, based on the programs are there, and that's why we outlined them that way. The UBF program, unsecured business financing program. I wanted to explain to everybody that this program is basically where we leverage the business owner's personal credit to establish EIN only business credit cards. Now, in that program, we also offer personal credit cards for people that want to either maximize their credit potential because they're going to need more money over and above that, or if they're just looking for more money in general. But 9 times out of 10, most of our clients and your clients will only want the business aspect of it, which is fine. That's why we like it. That's why a lot of other business owners like it too, because it divorces them financially from that particular that business credit. So what we do is we leverage it. So depending on the quality of that particular credit profile, this is a FICO 8 driven program. It works basically on bank card credit. So even though you'll have a mortgage, which helps, installment loans, department store cards, all those stay in the peripheral, if you will, unless they're negative, because they can disqualify you, but they're not going to qualify you, if you understand what I mean by that. What really qualifies you for UBF is bank card history: American Express, Visa, MasterCard, Discover. The higher the limits, the longer they've had them on file, and the lower the utilization, the more you're going to be qualified and the more money we're going to be able to get for your business. And the best example I use when I talk to clients, especially clients that are looking for credit partners, is I've had a 750 FICO score get declined, and I've had a 705 get 100,000. And the difference between the two is one had a lot better bank card history. That the 705 had a $15,000 Amex, a $9,000 Discover. All of them been on file for a while. They didn't just get them 5 months ago. They don't have more than 4 inquiries in the last 6 months, so they haven't been shopping around with everybody to find out what they can get. All those are patterns of I don't want to give this person credit. That's why we make those requirements. And then on the other side, there is a good FICO score, but just not enough credit built, not enough credit history, meaning that they've got a Capital One for $500. They got a Dillard's card, they've got a Walmart, and they've got a small car loan. That if they don't miss any payments, they're going to have a 750, 760, but they don't have enough experience or historical data dealing with high credit card debt. Or not our high credit card availability, I should say. How that person manages it. How many times have they maxed out the card and paid it down? How long has the card been on file? When did the card open? Has there ever been any late payments on there? All that stuff comes into play. So when we're reviewing that credit, sometimes I think it's the hardest part of our job as finance officers is telling us a person with 700 FICO or higher that they're not qualified for something. It's very, very difficult to do. But not everybody understands how credit works, so getting credit, and sometimes that's why not sometimes, that's why we do offer personal credit enhancement, because we can look at a credit profile and go, man, if they just had 2 of these cards, we could have got them 100 grand or more. So then we go, okay, well, we'll approve you, but it's only for personal. We'll get you these cards, and then 6 to 8 months later, come back after those have seasoned. Don't get any new inquiries during that time frame. Don't max out the credit cards. Come back to us in 6 to 9 months, and boom, we'll get you the 100,000 that you're looking for your business. But that's always easier said than done. I know that's hard. Most people are wanting to launch their business. Another thing about UBF, it is absolutely perfect for startup companies. I hear the sob story all the time. I thought this is what happens. A lady or gentleman say, hey, I'm retiring, or I'm just tired of working with somebody else. I want to start my own business. And then they go, okay, I've got these credit cards over here with plenty of room on them. And they use their personal credit cards to launch their business, right? Everything from GoDaddy to marketing to computers to, buying into the business credit builder program, all those business expenses. And then they max out their personal credit cards. And then they come to me for a loan with a 620 FICO score now and no revenues. Then if we could have just gone back in time machine, 3 months earlier and caught them when they still had their 700s, we could have gotten them 60 to 80,000 as a startup company. That would be kind of off the books. It won't be reporting to their personal. It'll build business credit from day one and give them the working capital they need to launch their business, whether that's a real estate all the way to opening up a restaurant. There's always room for more working capital, especially with 18 to 24 months, 0% interest. Because by the time the interest rate would kick in on that card, they'd already be 2 years old, and now they've got 2 years of financials that come to me. We get them term loans. So
Right.
that's the
Sorry.
onset of that.
Brian asked, what is a good amount of time for credit card aging on UBF?
Well, we like to see, hold on, I'm scrolling down here. We like to see at least 6 to 8 months time on file, preferably longer. But if you've gotten all those cards around the same time, then it might look like you've already been through a program before. So that's something that we look at too. We look at the date of the cards that were opened, and if they're all April 18th, 2018, then we know they probably went through a program. So we'd want those to obviously have more time on file so we can see how that credit is being utilized. But generally, we at a minimum 6 to 9 months. We like to see them older than that. We like to see a variety, like Discover Card from 2015 or American Express from 2017. Capital One, you might just got a year ago. We'd like to see a nice blend of that. We don't like to see a lot of credit too. A lot of people think more credit you get, the better it is. There is such thing as too much credit. We'd rather see 3 or 4 decent sized credit limit cards only than a bunch of small cards. I've had clients that have had 10 or 11 credit cards and they're all low credit limits. And I'm thinking to myself, how do you pay your bills at the end of the month? It must take you like half a day just to go in and log in and pay all those. So, we talk about that a lot as well. So yes, time on file is very, very important. We like to see at least 6 to 8 months though, from the newest file. Let me see here. Fees involved? Yes, good question. This is how everybody gets paid. We default at the 9.9% success fee rate, meaning, and I always use this analogy if to keep the math simple, if the first card we get you is a Chase corporate card, once you have that card in your hand, we would then invoice that card for a one-time fee of $990. Okay, the fees are broken down to 5% goes to the credit department, and then Credit Suite um, uh, shares or splits the remaining interest that's on, or excuse me, the remaining percentage for the success fee. So basically, you're making 2.5% on whatever we get approved. We get $100,000 lines of credit for your client, you're going to make 2,500 bucks. Hopefully that answered the question on that. Let me see. What do you see? Another one on there? Mine's scrolling up too fast,
No,
Suzanne.
that's it.
I
But I do
want to
have
move.
an answer about the credits, the Facebook page. If you're on your Suite login, the business profile, you'll see, or on the very home page, you'll see a link and it will say join us on Facebook with our partner network community. And when you click that, you can see it's Business Finance Suite exclusive network group. And you can click on add as a member, and that will be pending until they approve you. So again, that is from your homepage on your Suite login. Below training webinar, it says join us on Facebook, and the name of the group is Business Finance Suite exclusive network group.
Outstanding. And I know that we're going to at least have one or two more ways for you to access to add to the quality of these webinars. Because once again, we don't want these to be stagnant and boring. We want them to mean something. So we want to put more meaning in them. So that's why, especially when it comes to finance, because things are moving so much and changing so much, we want to make sure that we keep everybody abreast of the new programs that are out there. Because you could be out there, not knowingly selling a product that we either no longer have, or maybe the qualifications may have gone up or gone down. They may have gotten easier. Most of the time right now, they're getting easier. We're getting stuff funded that we couldn't get before, or at least the terms and rates that we couldn't get before. So it's very exciting right now in lending. I mean, everybody's lending money right now, so we need to take advantage of it. Before I close it down, guys, is there any other questions? I think the last question I got was from Eric, and that was on the fees and the UBF. Um, everybody's Anybody else have
You
any questions?
you
Say
want
again?
me to give those contact numbers again, because I know more people added
Yeah.
after I
Yes, if you
told you
don't
this?
mind, please do.
Okay. Okay. Again, so my name is Suzanne Young, and I will work with you lenders as part of our finance team to help if you've got any questions. If you have questions in putting in your clients, if you have questions of where do I put in my documents for a client and where do I find out the status of my client, you can ask me. My email address is Suzanne, Suzanne at creditsuite.com. And my direct phone number is 727-777-4503. And if you have questions, if you have technical issues with putting in clients, if your clients are going into the business credit builder, you would contact our partner success team. And their number is 727-324-6590. And when you are on our homepage, down on the right-hand corner, there's a little green button that says help, and that will get you to the chat. You can also click on contact us from the homepage, and that will give you the phone number and email address for our partner success team. And for billing, advising team is who works with our business credit builder clients, and then the finance team.
Outstanding. Well, thanks, guys. I know this was moving forward. It'll be a little bit more organized. We'll have more screen sharing and more stuff to show you, and we'll keep you abreast on all the new products that are coming out. And if there's any other ideas that you guys have or anything that you want us to add to this once a month get together, please don't hesitate to call us, email us, Facebook us, until I get the official way that we can
Yeah, I think the best
use this
way right now,
facilities.
Craig, is just to send me an email at Suzanne at Credit Suite, and I'll get that to the right person.
Perfect. Perfect. Awesome. All right, guys. Well, enjoy the rest of your week and good luck funding. We'll see you guys out there.
Hi, everybody.